What's the housing market going to look like next year? The California Association of Realtors just released their predictions for 2022. They're predicting the amount of homes for sale will continue to be limited, causing an upward pressure on prices. The data they've presented shows that sales for existing single-family homes are predicted to decline by about 5%, while the median home price is expected to increase by 5%, causing a decrease in affordability by 23%. In other words, the imbalance between supply and demand will most likely continue into next year, causing homes to become even less affordable for many entry-level buyers. And there are a ton of buyers wanting to buy a home right now. Gen Z, our youngest adults entering the housing market, felt the strongest about one day becoming homeowners. Of all the groups interviewed, they were the most willing to make sacrifices by adjusting their lifestyles, such as giving up alcohol for a year or skipping out on that annual vacation. Almost 84% of them said buying a home is about achieving success through sacrifice, hard work, and taking well-calculated risks. Millennials are our other biggest pool of buyers, and they're hitting their prime home buying age. In 2020, 72 million millennials had hit their 40s, and experts predicted that year to be a huge year for home sales, but the pandemic arrived during the spring of 2020, forcing many millennials to work remotely, which actually kind of helps some people out because the work from home order allowed them to stay in more affordable areas rather than living in the pricier areas in and around the cities where their jobs are located. For some, their savings for a down payment increased during this time, which is great. But there are just too few homes and too many buyers, causing this upward pressure on prices. And not just in LA, not just in Los Angeles, this is happening everywhere. Ellen Coleman, a real estate agent in Maryland, put a home for sale on Thursday morning, and by Sunday they had received 88 offers. More than 60 of them were all cash. A report found that 25% of offers are all cash, which obviously most sellers prefer. If a buyer is coming in with a financed offer, 75% of the sellers have said that offer would need to be at least 10% higher than the cash offer they're competing with, and that's just to be considered. So if you're competing with a cash buyer for a $500,000 home, chances are you're going to need to increase your offer by $50,000 to stay competitive.
What?
Now, this is great news for homeowners with a ton of equity and the motivation to sell, but for aspiring homeowners, not so much. Although some people did benefit from working remotely, there are those who just don't have enough liquidity on hand to make an all-cash offer like that. In addition, a huge concern people have is overpaying for a home. In fact, that concern falls second on the list of concerns for buying a home in today's ultra-competitive real estate market. The top 5 home buyer concerns right now are finding a home within their budget, overpaying for a home, finding the right neighborhood, rising rates, and discovering huge problems after moving in. Now, fourth on that list are rates. Experts also predict that mortgage rates will climb towards 4% by the end of 2022. And that's because the Federal Reserve, will soon slow the pace of buying mortgage-backed securities and will certainly raise its benchmark interest rate next year. That's important news. Rates are super important to keep track of because rates influence how likely people are to borrow money. If rates are really high, it's expensive to borrow money. Conversely, if rates are really low, it's cheaper to borrow money. And listen, 4% is still a good rate. By historical standards, 4% is good. But rising rates tend to price many buyers out even further, which will cause the rental market to become even more expensive because if people can't buy a home, they're most likely going to have to continue renting or living with their family. Now, if rates do continue to increase towards 4% as projected, we may see less and less intense bidding wars because it will likely price buyers out, opening up a window for those who have the money saved up to buy a home. Finally, before I go, I want to touch on foreclosures a bit because I often hear conversations and read social media posts that there are rumors of a tsunami of foreclosures coming. So people should wait to buy a home, right? Now, although no one can completely predict what will happen in the future, rising home equity might keep foreclosures at bay, at least for now. Homeowners have seen incredible gains in their equity over the past few years, which experts predict would prove to be a critical buffer to help owners who were hit hard by economic uncertainty during the pandemic. According to CoreLogic's latest equity report, in the second quarter, the average annual equity gain for borrowers was just over $51,000. 5 times that of a year ago. So although there are many valid reasons to wait to buy a home, if your sole reason is because you're waiting for these foreclosures to hit the market, you might be waiting a little while. Whether you're buying or selling a home, my recommendation is to find a broker you trust and just ask them questions, get to know them, build a relationship with them so that when it is time for you to make a move, you have the proper building blocks, you have the knowledge and the game plan already in place to make it happen.